We all make mistakes. What's important is that you correct these as soon as you find them. If you find yourself in a situation where you made a mistake on your taxes or did not file, you can correct your mistake through the Voluntary Tax Program, which is also called VDP in short form. The VDP gives you a second chance to change a tax return you previously filed or to file a return that you should have filed. You can use this channel to ask for relief from interest, prosecution, and penalties that might otherwise be charged if the CRA had found the mistake themselves. Almost anyone can apply, from individuals, corporations, trusts, and partnerships. The decision to apply for the VDP and come clean about all the previous tax transgressions is one that you will need to view very carefully and make sure that you meet the 5 conditions to get accepted for the VDP. These are: number 1, the disclosure should be voluntary. You see, the trick is to apply for it before the CRA comes knocking on your door. If CRA asks for your information or requests a filing before you opt to use VDP, you no longer have the voluntary status and no longer qualify for it. For example, if you're a part of a corporation and the other shareholders have had letters from CRA, well, now you know that your turn's coming. Number 2, it must be complete. Include all information for all the periods being corrected. It would help if you left nothing out and lay everything on the table for CRA. You might ask how far back the CRA will go. Well, for your disclosure to be complete, the current CRA policy is to require disclosure for all years. You see, this can create problems for disclosure dating back for more than 10 years, as the CRA cannot waive mandatory penalties or interest going back more than a decade. One solution to this problem is to request the CRA to accept disclosure only for the years for which the records are available. Number 3, a penalty must apply. You see, if after looking at a draft of the information you want to disclose, you find that you owe no taxes or penalties are not likely to be assessed, the VDP might not be for you. Number 4, the information or return must be more than a year old to qualify. The VDP does not apply to current filings. Number 5, you need to include the payment of the estimated tax owing. So under the current VDP structure, there are 2 separate programs for income tax disclosures: the limited program and the general program. The first track is the limited program, which will offer, as the title says, limited relief to you if CRA determines that you have intentionally avoided paying taxes. Suppose you are accepted under the limited program. In that case, you will not be subject to criminal prosecution. You will be exempt from the more strict penalties, which usually applies in case of gross negligence. But you will be charged under other penalties and interest based on their assessments. The second track is the general program, where the same rules apply regarding criminal prosecution and gross negligence penalties, but unlike the limited program, the CRA will provide partial relief of interest for years preceding 3 most recent years. For example, suppose you made an application to the VDP and have failed to file returns for 2010 through 2017 taxation years. In that case, you may be provided with interest relief for taxes owed for 2010 to 2014 taxation years. Such relief is generally equal to 50% of interest owed. That is, you will be required to pay only half of the interest charges which would otherwise be levied for those years. No interest relief will be provided on tax amounts owed for the 3 most recent years, that is 2015 to 2017 taxation years. Since interest charges levied by the CRA are, by law, greater than the current commercial rates and interest charge is compounded daily, having interest amounts forgiven, even in part, can make a significant difference to your overall tax bill. You see, VDP can reduce your tax liability and help you avoid criminal prosecution. It can help you get peace of mind and sleep well at night, which is priceless. But please make sure to talk to a CPA or a tax lawyer before you take this step. Thanks for watching this video and see you next time. Bye.